Topic 1. OpenAI closed a record private financing round of roughly $110 billion, with major commitments from Amazon, 50 initial 15 buy dollars, then conditional add-ons, Nvidia 30 buys, and SoftBank 30 buy, lifting its valuation into the roughly $738 and $40 billion range and making AWS the exclusive third-party cloud provider for OpenAI's Frontier Enterprise platform. The company signaled massive compute plans through 2030, targeting about $600 billion in total compute spending, and projected 2030 revenues in the hundreds of billions. Google launched Nano Banana 2, speeding up generation, improving prompt adherence and text rendering while keeping Nano Banana Pro for high-fidelity tasks, intensifying competition with OpenAI, Adobe, and others. Meanwhile, Anthropic is in a standoff with the U.S. Department of Defense after the Pentagon demanded models be usable for all lawful purposes. Anthropic refuses to abandon its ethical limits. No fully autonomous weapons, no mass surveillance of U.S. citizens, and faces threats of contract termination, supply chain risk designation, and even DPA action, turning a $200 million contract spat into a broader regulatory and ethical conflict. Topic 2. Block is cutting roughly 4,000 jobs, about 40% of its workforce, citing AI-driven automation, with CEO Jack Dorsey saying smaller, talented teams can move faster using AI. The announcement sent the stock up as much as 24% in after-hours trading. The company expects $450 to $500 million in restructuring costs and is offering roughly 20 weeks' pay plus 10-year add-ons, accelerated vesting through end May, 6 months of health coverage, and $5,000 in outplacement support. CoreWeave beat Q4 revenue expectations at about $157 billion, but gave Q1 2026 guidance, 1.9 2.0 UB, below consensus and plans 12 to 13 buys in 2026 revenue, plus $30 to $35 of capital investment, noting Nvidia GPU supply constraints. Flutter, FanDuel's parent, missed Q4 estimates and cut 2026 guidance, while eBay announced about 800 layoffs, 6% amid strategic shifts, including its recent $1.2 billion Depop acquisition. The common thread? Rapid AI adoption is reshaping headcount and investor reactions to cost savings and demand uncertainty. Topic 3. Paramount Skydance submitted a revised cash offer of $31 per share for Warner Bros. Discovery, which the WBD board deemed a superior proposal versus Netflix's earlier $27.75 per share bid, focused only on studio and streaming assets. Netflix chose not to exercise its 4-business-day matching right and withdrew, saying the price and regulatory risks made matching unattractive, while Paramount agreed to cover a $7 billion regulatory termination fee and assume a $2.8 billion payment that would otherwise go to Netflix. Markets reacted. Netflix shares jumped about 10% after hours. Paramount also rose and WBD fell, but antitrust and political reviews, especially around news assets like CNN, could keep regulatory scrutiny and delays for months. Topic 4. January's PPI came in much hotter than expected. Core PPI plus 0.8% month-over-month, 0.3% expected, and headline plus 0.5%, driving core and headline year-over-year rates of about 3.6% and 2.9% respectively, with trade services, a proxy for wholesale margins, up sharply, plus 2.5%. The report triggered risk-off moves. Investors bought treasuries, 10-year around 3.98%, 2-year 3.41%. Equities fell sharply with the Nasdaq and S&P facing a rough month, and UBS downgraded U.S. equity exposure to neutral amid valuation and buyback concerns. Nvidia posted an eye-popping $120 billion profit last year, but investors remain jittery about valuations and demand sustainability. On the housing front, 30-year mortgage rates dipped below 6% to about 5.98%, offering a potential lift to buyer sentiment. Topic 5. U.S.-Iran indirect talks in Geneva were described as the most intense to date but did not produce a deal. Both sides agreed to continue negotiations after Oman-mediated sessions that reportedly achieved substantial progress, while core disputes remain over U.S. sanctions relief and Iran's refusal to accept an explicit renunciation